All right, so this is for my first time home buyers, right? We're going to just talk about some mistakes or some myths that I see coming along when I'm not part of the deal. Generally, I see this is that they fall in love with the house. They don't really understand the need to be pre-approved up front, and they don't, look to make sure that they have a really good understanding of what their monthly payment's going to be or their out-of-pocket costs. And the reason why that's a problem is because they look online and they see the homes and they're searching and they're shopping, window shopping. Like everybody likes to buy, nobody likes to pay. So we're looking and we're imagining ourselves and we find the house and it's the one. Before I even own it, before I even made an offer on it, before I even saw it, right? I fell in love with it. And so I see a lot of first-time home buyers jumping onto that next chapter in their life without really understanding all the things that have to go through the process. And so sometimes when those home buyers, they get connected with me because the realtor says, hey, well, the first thing you need to do before you make an offer is you need to talk to Joel or somebody like Joel to make sure that you are eligible and the programs are going to fit and we can do this. And when they talk to me, I feel like I broke their heart. Like somehow I've stolen their future away from them because I'm actually telling them information that, man, it would have been helpful if they knew this a couple of months ago to kind of set the proper expectations. And so we start discussing interest rates and monthly payments with accurate insurance and taxes and what the out-of-pocket cost is going to look like and where the down payment's going to come from. And because none of that has really been discussed before, it's kind of a letdown, where they're super cloud nine, excited, wanting to do this is going to be great. And then reality kind of sits in that, oh my goodness, I didn't realize it was going to be this expensive. I'm not quite sure how we're going to pay for that. What are we going to do? And that's just not very fun. But it's a real conversation that I see a lot where first-time home buyers just need to get in front of a lender sooner so they can get some of that clarity around some of their questions. That way, when they are online searching, we're looking in the right bucket, right? Now we'll be looking, this is the price point I should be looking to keep my payment where I can afford it. But I'm just going to look over here because I like to see those other houses that have the extra big pool, or the big movie room, or the big chef kitchen. Everybody likes to dream, right? Like I have a dream called Rancho Bonito. So I'm like, yes, I would like to live on a bunch of land and have all that kind of stuff, but my wife will never let me do it. So it's just a dream, but it's still in my mind. But I got to be clear about what my budget needs to be to make sure that I'm planning for the future, that I am structurally safe as far as reserves, and that I am financially stable in case my income changes or there's a life event that gets brought to me that I wasn't expecting. And life typically does that to us, where we think everything is perfect and then boom, here comes something else that we weren't quite ready for. Most pre-approvals are trash because the lender issuing them doesn't have any idea what they're doing. They are literally application takers, or better yet, they're customer service reps. So the loan officer you're talking to is just, hey, what's your income? What's your debts? And they're kind of just writing down the checklist on the menu, or you submitted that yourself online, so they already have the data. And they're clickety-clicking their buttons and they're doing an eligibility test. They're not originating the loan. They are just taking an application. They're not validating information. They're not checking information. They're just reviewing what you said and saying, hey, yeah, this looks like it's good to go. Here you go. I've seen several pre-approval letters that clearly state, based on your verbal information for income and assets, and based on your soft pull credit report, you are pre-approved for $500,000. Congratulations. That's why they're trash. That's why they're useless, because you haven't even provided any of your information yet, and the lender's giving you a $500,000 check that says that you're good to go. That's not going to make for an enjoyable lending or buying expense, because we still have to validate things. And believe it or not, there's about 100 different forms of income, and they all get evaluated a little bit differently. So your income and your assets are extremely important to your loan approval. So if anybody ever gives you a pre-approval letter without having those in hand, you know that they just lied on paper. But unfortunately, I think everybody does it. Yeah, Mortgage does it. BigBank.com does it. All your competitors do it. I think we've been kind of programmed to ask for a pre-approval letter. And so a lot of lenders just give it away like it's a tic tac. But unfortunately, it's not worth the paper it's written on. Credit scores and the truth about credit scores. This is a big one. There's a lot of confusion around it because there's probably 45 different actual credit scores out there, and let me explain. So FICO is the algorithm that the data gets pushed through for the lending industry. So you have different lending industries for credit cards, car loans, mortgages, student loans, business loans. Different financing industries have different FICO algorithms, and Equifax, TransUnion, Experian are the data houses that actually have the data that gets run through the algorithm. So when you're talking about your credit score, you may be looking at a consumer app that has a more recent version of FICO, maybe a FICO algorithm for credit cards. And you're looking at your score and your score says, oh my goodness, I'm a 720. When you come talk to a lender, they're going to run your data through a FICO algorithm for the mortgage business. This is a more harsh algorithm. I'm trying to give you a loan for 30 years, so 360 payments. My credit score might be 692, or it might be 701. So there's a lot of confusion on why the scores are different. And the reason is different credit bureaus, Experian, TransUnion, and Equifax, different FICO algorithms. So when you start running the data through each one of those algorithms, that's why you end up with over 40 different versions of credit scores. Now, I usually don't tell people like who they should use or not use. Of course, I would say use me, the comp factor and everything would be great, but I know people are just not gonna do that. I don't know everybody, but I would probably shy away from online lenders. There's not a lot of regulatory guidance on them. And I see a lot of bait and switch kind of stuff, hidden fees or different things. This is usually what happens with an online lender, where you get a great interest rate quoted to you up front, and the lender says you're good to go. They're super fast. You love it because they quickly tell you that everything's fine. And you choose them as the lender because obviously they have the best interest rate because it's the lowest. They have the cheapest fees. That's great. Some out-of-pocket costs. They were super quick and fast and told me I was approved. So they're winning on all three levels, right? And then you get under contract and the file gets into processing, and then they start to give you a little bit more recent updated information with actual insurance, actual taxes, not this little estimate that they gave you beginning. So now your payment is starting to increase, right? That's making you feel a little uncomfortable. And then about a week before closing, they lock the loan and your interest rate is the same, but the cost for the rate is a lot more. They didn't tell you that there was a cost for the rate in the beginning, and now there's a big cost. Now your funds to close just jumped up. So your payment's higher than you initially thought, your funds to close are higher than you initially thought, and then they start getting into the third-party fees. See, a lot of lenders just don't do an honest job of disclosing normal and customary fees for third parties. So like the cost for your title company, that's going to be the same whether it's an online lender or a big bank or a local mortgage banker like me, because the title company's fees are the same. Your escrow, like with your insurance and your taxes, those are all federally regulated. Those are all going to be the same. But I see a lot of lenders underdisclose those sections on the loan estimate. And so now the cost for the rate is higher, your insurance and your taxes are higher, so your payment's higher. And then those fees that are third-party fees, now they're coming in for what normal and customary fees are going to be, and they're actually higher as well. So it doesn't usually end very well for a borrower with an online lender because they just don't do a good, honest job. And if you looked up their reviews, you would probably see people talking about this, where they didn't feel like they got what they initially thought they were. They call it a bait and switch, or they call it hidden fees, so I would probably shy away from online stuff. I would use who your realtor referred you to, because that's the partner that has a history of getting deals across the finish line. Somebody local, somebody with experience, somebody who does more than 2 loans a year. That would be my choice, to use somebody local. I think what realtors wish buyers knew before starting is what the monthly payment should be and what the out-of-pocket cost should be. If we have those two numbers, then we know how to structure the offer. We know how the sales price needs to be written. We know how the seller contributions need to be written. That way, the realtor is able to find people homes that fit their budget, and they're not going to be disappointed once they find the house and start to learn about all those things. So being over-prepared is a really big piece for a real estate agent and their clients. And I think realtors would really love it if all their buyers would go get pre-approved and have those two numbers: monthly payment, out-of-pocket costs. If you like this stuff, if you want to learn more about this, be sure to like, subscribe, and share and comment below.